Hello, yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. Today is 8th of December. So today's webinar basically, I'd like us to look at a very simple strategy, a 15-minute strategy. Remember, there was a time we talked about 5-minute strategy. Today, I'd like us to build on that, and I want us to look at a 15-minute strategy. That is a strategy which I believe, if used properly, you can really get the best out of the market. So this is like some sort of scalping strategy because it's on a lesser time frame. It's like a scalping strategy. The first thing which I'd like to say is that we do have several types of uh, trading strategy. I mean positions, trading strategies. We have like the scalping strategy. This is where somebody enter trade and then exit that trade maybe in some seconds or maybe some minutes, or maybe they can take some less than an hour, some very many minutes, but less than an hour. Then we do have day traders. So the day traders are those that they'll enter trade, then the trade it must be closed by the end of that day. So they are referred to as the day traders. Then you also have the position traders. Those are those that when they enter trade, the trade remains open for around the trade will remain open for around a month or so. So as I was saying, we do have position traders. So those traders who, whenever they enter the trade will continue to run for 1 month or 7 weeks or so. So basically, on the 15th side, is that you enter trade, and the trade cannot go up to the end of the day. The trade goes up to maximum the end of that day. Okay. There is one thing. If you're that person who knows how to trade head and shoulders formation, then the best time frame to look for such a pattern is 1 minute, 15 minutes, or I mean 1 minute, 5 minutes, or 15 minutes. So if you're that person, if you know how to draw shapes very well, then you can look for those shapes on the 1 minute chart or 5 minutes chart or the 15 minutes chart. So there is one thing. Uh, there are several strategies which I'm going to look at basically. So you just need to get the one which works the best for you. The first one is monitor the previous week's highest high or lowest lows. So draw a line along the previous day's highest high and the previous day's lowest low. Like the one we have here, this is the previous day's highest high. Then you have another low here. This is the previous day's lowest low. So what you do here is if the price goes and touches the previous week's highest high and attempts to break beyond it and then closes below it, then that is a good sign for a sell. Like we have the high here and then we have the low here. This was the previous day. This was on 6th of December and this 7th of December. The price went as high as this point, touched it, consolidated, then it came back and closed below it, and then you can even see signs for a sell. There is a bearish pin bar here, there is a bearish pin bar here, indicating the sign that this could be a good sell. So this indicates that this could be a very, very good sell. So while this was happening, when the price goes down below this point, and then there is the pin bar, then there is this is a good sign for a sell. You're supposed to pick that sell position. Your take profit should be as immediate as possible. So if you sell it, assuming the price comes to this point, then you one thing, sorry, I have not mentioned that. Anytime you have the daily high here, when the price goes and touches this level, the first touch, and then it gives us a sell signal, don't sell it. Do not sell it. So sell it if the price shows sustenance. That's if the price continues to do the same thing, touch the same level, going up, going down, up, down, up, down. That's when you're supposed to sell it. It means we are basically struggling to clearly get beyond that level. So in truth, the daily high is here. So the price comes to this point, then begins touching it, up, down, up, down, up, down, but does not clearly break above it. Or if it breaks above it, comes again below it, then that is a sign that this is a good place to sell from. So you're supposed to sell it there, hold on to that position, take profits around 20 pips. Your stop loss should be above this consolidation here. So you'll sell it somewhere around that area. You have your stop loss here, and the take profits 20 pips below that area. So the take profit should be at least 2 times where the stop loss is. So if you have the stop loss maybe at, how many pips is this? If you have the stop loss maybe at this number of pips, this is around 4 pips, then the take profit should be 20 pips. So 20 pips is here. This is 20 pips. Just a second. We have 20 pips here around this area here. And the first touch, you don't do anything. So when the price came here and touched this point here, but does not clearly touch it again, then we don't sell it. So today, as we're speaking now, we are looking for price around this level here, and then you're looking for price also around this level here. So if the price comes back and touches this area here, then we want to see some struggling around this point or some struggling around this area here, so that we pick a low risk buy position. So there is one thing which I want us to improve this now. So what I've said is basically price action. There's a way that you can now confirm that it is true. This could be a very good place to sell from. So if, for instance, the price is touching this high here, and at the same time the price is touching this high, then you have this indicator. Insert indicators, and then you go to the oscillators, and then you have the RSI, I mean the stochastic indicator. Where is it? Stochastic. Have it here. So with the stochastic, you use the default inputs, parameters. You use the K period as 5, the D period as 3, then the slowing period as 3, and then the price field should be high and low. Then the method is just simple. Okay, so this is how I'd use it. You can see here that during the previous day, we had the stochastic being overbought. I'll draw a shape here. The stochastic was overbought. Just a second. I'll draw it so that we're able to see it clearly. The stochastic was overbought. The stochastic was overbought here. At the same time, the RSI, I mean the price was overbought. Here, the price was here. So now that the price went down, and then it came back and touched this level here. While it's touching this area, notice what's happening on the stochastic. It is here. So the stochastic is also overbought. You can see something here. You can see it here, that as the stochastic began to be overbought here. At that time, the price was somewhere around this area here. So as the stochastic continues up, wait for price to touch this area here. And if the price is touching that area and the stochastic is still above 80, then that is the correct time to look for a sell. So the idea is to look for the same thing which was happening yesterday and the price sold off. So yesterday we had the stochastic above 80, the price was here and the price went down. So today also we wait for the same thing. The price is here, the stochastic is above 80, and then the price is around the same place it sold off from yesterday. So you sell it. Does that make sense? So if you're a bit conservative, you may also wait for price to at least try to consolidate. As I've mentioned, you may wait for price to consolidate, struggle, so some struggling before you can eventually pick a sell position. So the same thing would apply because we'll still sell off. Okay, today what I'm waiting for here, because I have this, this is oversold, but as you can see, the price is not yet anywhere around this area here. So we want that the price must come back to this point here, and at the same time the stochastic must be below 20. So when that happens, that is now an indication that you're supposed to pick a buy position. So if this happens, if the price gets here and then this happens, then this will act as a good place to look for a buy from. So we want the same thing to be happening. We are not going to buy this based on whatever you call divergence or convergence. We want to buy it when the price gets to this low or when the price gets to this high. So the reason we cannot sell this highly likely not going to be a sell here is because yesterday, we may still sell it. We may still sell it if the price can get to this high here. If the price can get to this high, because this was overbought, if the price gets to this high and at the same time there is this here, the price is hitting this level, then this will act as a good place to look for a sell from. Does this make sense, whatever I'm saying? Does it make any good sense, whatever I'm currently talking about? Okay. So the secret is this, that the main point here is this, that we want to sell when the same thing which caused a sell yesterday is happening right now, or when the same thing which caused a buy yesterday is happening right now. So the previous day, we had price here, and the stochastic was overbought. That's why we took a sell. Today also, the same thing is happening. The stochastic is above 80, and the price is around the same place where we sold yesterday. That's the main reason we're looking for a sell. We'll look at a different chart. Yeah. So this chart here, basically, we do have, let's see, this is high, and then this is the low. So the next day nothing happened, but we have this one, the day after that. This is that day's high side, and then sorry, this is sorry. Remove this auto scroll first. There are several lines on my screen. The line which is next to the black one, those are just that's the ask line. So we remove it. We'll remove that, and then we remove the bid price, and then we remove also the last price. Yeah, done. So we have this here. This is this day's highest high, and then this day's lowest low. So we have this as this day's lowest low. But as you can see, what happened here, the price actually did not break below this low, the oversold area. So this was not a good low. We want a case where the price actually bounced off from the oversold area. So that did not happen there. Here, the price attempted to go below, but this is not the day's lowest low. The day's lowest low is actually here. So far, even this did not close clearly below the oversold area, didn't actually close clearly below it. So we'll not look at that, focus on that. Let's get another example. okay, there is another side of this. There's another side of everything here. That if, for example, is for instance, we had this high and then we had this high, the price being overbought. If, for example, the price clearly breaks above this point and you can see that this is a breakout, then actually wait for a buy signal instead of a sell signal. So you don't have to keep looking for a sell just because there's a sell here. The same place we sold off from may act as the best place to look for a buy from. So we are basically just waiting to see what happens. If the price clearly ascends above this area here, then we want to see some signs that the price is indeed continuing upwards so that we pick a buy position. If that does not happen, then that's when we settle for a sell. I hope that makes some sense. So basically, that's the strategy. That's the secret behind the strategy. I'm not going to talk much about it. What is most important, which I mentioned, is that the same thing which was causing a sell yesterday should be the same thing happening now for us to sell it. Then we must be around today's highest high, and that previous sell or buy must also be around the previous day's highest high or the previous day's lowest low. So the most important thing, are we around the previous day's extreme high or the previous day's extreme low? That's not enough. Are we around today's highest high? Is the high which we're seeing now the highest high or the lowest low? So when all those conditions are true, then that's the only time that we focus on a trade. So thank you very much. That should bring us to the end of today's webinar. We'll meet again on Wednesday next week at the same. So thank you and see you.